Hi, welcome back. You're still watching Business Lunch on CNBC TV 18. It's turning out to be quite a good day for the market, but one pocket that's looking very good is aviation. The stocks are all up and about in trade. The government may soon provide some relief to airlines. Sources suggest that the Finance Ministry has prepared a proposal to reduce the excise duty on ATF, and the Election Commission has approved that request from the government. Now, sources tell us that there will be a cut of 1,500 rupees per kilolitre that has been approved. Remember, currently the prices of ATF stand at about 74,560 rupees per kilolitre. A cut of 1,500 rupees per kilolitre is merely a 2% relief. Currently, the excise duty on ATF stands at 14%. The industry wants it to be brought down to 8%, but we understand that in the next few days, the level may be brought down from 14 to 12%. This means that there will be a marginal 3 to 4 paise relief for these companies. So, for example, Jet Airways had a fuel bill of almost 7,400 crores in FY18. A 2% relief means Jet Airways costs per annum on fuel will come down by 150 crores. Jet Airways has about a 15% market share. So for the industry, the fuel cost would fall by about 850 odd crores, which is not too much, but you know, the industry will take anything at this point in time. We understand that over the next few days, this this announcement may be made, and that's the reason why the stocks have been up and about.
All right, that could be some relief coming in for the aviation sector. But on to another big development today, and CCI, the Competition Commission of India, which has, remember, a crucial role. Its approval is extremely important for any deal making in the country. And the regulator has announced some amendments today, which could make deal making easier. A few of those hindrances are done away with in this particular amendment. The first one is that companies can withdraw an application and refile with changes at the phase 1 level. Now remember, it's very, very important because companies can now get a chance to offer remedies in phase 1 level itself. So what happens is that it will not go to an advanced level where CCI itself gives remedy for a complicated or a problematic deal to go through, which the parties do not agree to. So here it gives a chance to the companies to come back on the drawing board, change it according to the CCI's approval requirement, and then go back to the table. So that could really bring in a lot of ease for the deal makers. A lot of times also remember that the additional time is required, and the 210-day period has to be met. So now the CCI is also going to exclude that time by the parties to provide additional information from the 210-day deadline, which means there will be a stopwatch. So these are important things coming in. One very good positive that is there is that CCI has not made any changes on the exemption of non-controlled minority investments. That means the smaller investors below 5% of stake do not need to be notified, and lessens the compliance as far as the CCI approvals are concerned, Sonia.
Okay, well, that's the big story there. But moving on, a lot of these stocks are up and about because of the buyback news flow. So NLC India is one such stock. The board has approved a tender buyback of equity shares worth almost 1,250 crores. Rakesh Kumar, the chairman and managing director of NLC India, says that they have sufficient cash on their books in order to fund this particular buyback. Let's listen in.
We have offered buyback of 14.19 crore shares at 88 rupees, and we feel that we will be able to fund this buyback. This is expected to require some 1,250 crores approximately, and we have sufficient funds available for funding this buyback.
All right, on that note, the mid-cap universe is looking extremely good with 600 points added at this point. So a huge amount of gains seen. Some of the financial services companies, and especially the mid-cap banks, are seeing more momentum. It's a sustained rise that we are seeing even at lunch hour in some of these counters, namely Bank of India, Canara Bank, IDFC Twins. They're also doing pretty well. As far as the large caps are concerned, Axis Bank, ICICI Bank, even Tata Steel is performing extremely extremely well. So these are the counters to watch out for, but overall market looking quite sound and solid at this point. Now, the Rafale saga, that continues, and the Supreme Court has refused to issue notice to the Prime Minister as had been sought by the petitioners in this particular case. Ashmit Kumar, who's joining us with more details on that, he was in the courtroom today and has been tracking that development very, very closely. Ashmit, give us the latest on this.
Well, what we understand is that the petition essentially made a couple of demands before the apex court. The first was the scrapping of the deal. The second was a probe to be instituted as far as this entire deal has been concerned, a special probe to be constituted. And third would be to seek details as far as the procedures that were followed with respect to this entire transaction. Now, as of right now, in response to these concerns, the Attorney General made the government stance quite clear that these are very, very sensitive details that are currently being sought, that this involves matters of national security, that given that the petition had made Narendra Damodar Das Modi as a respondent in this case clearly indicated that this was a politically motivated petition. It was designed to gain political capital. It was designed to malign the Prime Minister of the country, and that this cannot be heard. This should not be heard by the apex court. Now, in response to these concerns that had been raised by the Attorney General, we have a clear order being passed by the apex court. The Supreme Court has held that though it does not see much merit in the petition, in the arguments that have been raised in the petition, nonetheless, to satisfy its own conscience, it has sought the details from the government on the processes and the procedures that were followed and whether or not they were in compliance with the defense procurement policy. Having said that, the apex court also clarifying that as of right now, they're not seeking any details as far as pricing is concerned, but nonetheless asking the government to clarify on the procedures that have been followed. So in a manner of speaking, some amount of heat being turned on, the transaction being placed under the judicial scanner. But as of right now, the Supreme Court clarifying that we are not issuing a notice to the Prime Minister, but nonetheless, we will be seeking details of the Rafale deal to satisfy their conscience. Back to you.
Okay, Ashmit, thanks a lot for that. Well, moving on, India and Iran are yet to reach an agreement on the payment mechanism for oil imports. To get us more on this, Parikshit Luthra is with us. Parikshit, what are you picking up?
Well, we're hearing that still there is no clarity on the payment mechanism that is going to be worked out. A couple of months back, the Indian government was very, very certain that the rupee real mechanism would be used this time around as well to buy oil from Iran, because this is a mechanism which we've exercised in 2012 as well. But this time we believe that Iranians are insisting on a euro guarantee. This has been with the Chabahar port as well. According to reports, Iran is insisting on a euro bank guarantee for the Chabahar port. As far as oil prices are concerned, we believe that there is no clarity and no consensus as far as the rupee real mechanism is concerned, and all options are open. That is what the Indian government is saying, and they're yet to reach a conclusion.
All right, yet to reach a conclusion. Thanks so much, Parikshit, for getting us the latest on that development.